Hello future homeowners, this is Jeremy Williams, your local real estate broker at the Bannock Real Estate Group, and today we're going to be talking about the next step in our Homeowners Handbook series. If you remember last week, we talked about how to identify the right property up until the point where we're making an offer. Today we're going to be talking about probably one of the most important parts of the process that we should be doing even before those steps is identifying the right lender, making sure you have the right loans in place, and most importantly get pre-approved before you actually make an offer. So we're going to go through all the different steps that you need to be thinking about to make sure we can secure financing and get you into the next house. So with that, let's get into it. The first step in securing financing is picking the right lender that's going to represent you and work with you to secure the loan and the financing before closing. So how do we pick the right lender? Well, there's a couple things that I focus on. First, you want to find a great communicator, somebody that's following up with you, being proactive to walk you through the process so you can know what's going to happen before you actually get there. That's going to be invaluable, especially in today's market. If you are a seasoned homeowner and you've bought houses before, but it's been a couple years, most likely that process is very different today. So you're going to want somebody that's really communicating well with you, give you some understanding of what to expect. Second, find somebody that has experience because there's different ways to craft loans to help get you the best terms. Everybody has different goals. Your goal might be low monthly payments. It might be low down payment. There's a variety of other things that might come into play when it comes to crafting the best offer. And plus, there's a lot of different loan programs between FHA, VA. There's remodelers loans, there's conventional loans, there's a whole gamut out there. So somebody that has some experience that can sit down with you, understand your needs, and craft that right loan is going to be really important. And then last, you do want to find somebody that has some flexibility of loan programs because not all lenders have the same programs. Now that we've identified the attributes that we're looking for in a lender, how do we find the right lender for you? Well, it's not as easy as you might think. A lot of times we talk to buyers and they just talk to the one person and that lender says they can do the job for them and that's what they stick with throughout the process. I want to caution you on this because not all lenders are the same. They don't all communicate the same. They don't have the same programs. In fact, there's two different types of lenders. There's mortgage brokers and there's mortgage lenders too, and sometimes there's some variations between them. So we want to make sure we're finding the right person for the job. So how do we do that? Well, first, consult local resources like myself. You talk to your local real estate brokers. We work with lenders all the time. We know who's out there right now communicating well, has the best products, and is willing to be flexible and sit down with you and work for you to find the best financing options possible. So local resources, local real estate agents are going to be a great way to get some options for lenders. Next, friends and family is a good way, but keep in mind, the lender that your friends and family use might not be the one that's the best fit for you. And then you can consult the internet, but I'm going to be very cautious on that because a lot of times what appears to be the best lenders in the area are just the ones that are simply paying more money to get their ads ranked higher. So that would be the last way that I'd go and find out lenders. Here's something that's really important. When we talk to buyers, a lot of times they end up working with the first person they talk to. Again, all lenders aren't the same. It's really important that you interview. If you came to me, I'd give you 3 or 4 lenders that you can talk to and interview with that then you can determine who's best for you in your situation. So we do want to make sure that we're just not picking somebody because there's a lot of people that can do the job, but could they do the job best for you? Now that we identified what we're looking for in a lender and how we're going to find that right person, what are the things we want to be thinking about when we're interviewing these lenders? Well, one of the most important things I want to caution you about, and this is what most buyers do, is they do what we call rate shopping. They go to each of the lender and say, hey, what's your rate, what's your rate, what's your rate? That is absolutely the wrong way to find your lender. And the reason I say that is because most lenders can get the same or very similar terms from one lender to another, but it's just how they position it. And it's really important to understand how lenders get paid to understand what the best loan for you is. So lenders either get paid by offering high closing costs and lower rates, or low closing costs and higher rates. And it might even sound counterintuitive, but sometimes a higher rate, depending on the circumstance, might be the better loan for you. So finding the person that you connect with, identify with, and communicate well with is going to be the first part. And then the second part is working with them to craft the difference between down payments, closing costs, and rates to understand what's the best circumstance for you. So don't go out there and rate shop. Make sure that you go through the process and understand who you're working with first, and then nail it down. Make sure you're comparing apples to apples. There's so many times where I'll get a call and they're like, hey, I really like this lender, but this lender over here said they could do it for 1% or 2% less than this other lender. Well, there's something going on there. The bells should be going off, because most likely the lender that's offering that low rate is charging a lot of money up front to get that rate down. So if you have any questions, you could always give us a call as well. We're here to help as a team work through the process. Now that we found the right lender to work with, we're going to be working with that lender to get through what we call the pre-approval process. This is where the lender's going to, they're going to look at your credit scores, they're going to verify your employment, look at all your financial history to paint a picture of what you actually qualify for. So they're going to give you a number based on what you've given them. They're going to approve you for a certain price range. That price range is what we're going to use to go find the right property for you in the marketplace. That's going to do a couple things for you. First, when we walk into a house with a pre-approval letter, or especially if we bring an offer with a pre-approval letter, that's going to give you a lot more negotiating power than if you haven't started the process. But it also gives us a guide to where you feel comfortable. Even in today's market, you might qualify for more than you actually want to spend. So it gives us a guide for, I know we approved for this much, but this is where we're looking for a house. And we can be real honest with ourselves and make sure that we get something that you don't look back and wish you had done something different. So that pre-approval process is necessary next step before we go purchase a house. Now that you've committed to the process, there's a couple things you certainly don't want to do when you're looking for a house, and especially after that house is under contract and you're working towards closing. For instance, I have actually seen this happen where we were getting within a week of closing, and that buyer went out and financed a couple $1,000s of furniture, and going through that process actually changed their credit score enough that all of a sudden they couldn't qualify for the loan anymore. And we eventually got it done, but it wasn't at the same terms that the buyer was expected. It's really important, you're committed to the process. You don't spend a bunch of money, you don't go out and finance things, you don't buy new cars, you don't buy furniture, you do all that stuff after you closed on the house. It's really important that that lender doesn't see a lot of changes going on, and a good lender is also going to work through a lot of the paperwork and the due diligence. It's really important you get them things as fast as possible, because any delays in paperwork or verifications could delay the close-in and could create an uncomfortable situation, or even a time where people become homeless and aren't able to move into the next house. So really important, don't change your financial history while you're under contract, and then also be diligent. Get the lender what they need as soon as they need it. That's going to ensure a smooth process moving forward. Securing financing is a significant milestone in the journey of home ownership, and it's the necessary next step. If you have any questions about the process, what's involved, who you should be talking to, please reach out to me. This is what we do. You can reach me at 406-531-1519, and I'm here to help. Also, hit the subscribe button so you can see future videos that are going to be coming out in the homeowner's journey. As well as hit the like button. Of course, make any comments. If you have any suggestions of future videos you want to see, please let me know. With that, we look forward to seeing you in your new home.